Welcome back to our podcast. Our first story is close to home for us. Reverse Focus, our parent company of HECMWorld, and also a software as a service provider for you as a reverse mortgage professional with websites, a reverse specific CRM, and also SEO services. We are pleased to announce this, a strategic integration with Reachality's state-of-the-art AI engine. Now, this collaboration heralds a transformative tool which promises to revolutionize the engagement with website visitors in the reverse mortgage sector. Reverse Mortgage Daily's Chris Clow writes that Reachality's Lumina seamlessly incorporates a lender's or an originator's individual reverse mortgage content into a dynamic conversational experience. Now, by us deploying Reachality's innovative AI chat engine, we here at Reverse Focus aim to extend the visitor retention and visit times on their websites, and that's critical for generating reverse mortgage prospects. Moreover, Reachality's AI engine meticulously curates each of your website's content to deliver intelligent responses to a wide range of questions. Now, I personally know that keeping your visitors on your website for longer, that is key to engagement and generating leads. And Reachality's AI chat engine can do just that for Reverse Focus's existing web clients or new ones who use the service. RMD noted that Reachality, a trailblazing AI integration and software development company, has now emerged as a frontrunner in revolutionizing conversational AI in the reverse mortgage sector. And their products, Lumina SMB and Lumina Enterprise, those have set a new industry standard by prioritizing content and context, and that fosters meaningful interactions. Leveraging cutting-edge advancements in large language models, Reachality now has overcome barriers to deliver genuinely beneficial products. Byron Torres, CEO and founder of Reachality, emphasized their company's mission, stating, "We aim to modernize the reverse mortgage industry, meeting the expectations of today's tech-savvy seniors and upcoming Gen X demographic. Our collaboration with Reverse Focus is a significant stride in equipping mortgage loan officers with advanced AI tools." Now, Reachality's dedication to simplifying the complex industries through innovations in AI positions them as a leader in reshaping the digital landscape, especially for us here. So as they continue to push technological boundaries, their partnership with us here at Reverse Focus brings us a brighter future for our customers. That's you as the loan officer. So for more information on this groundbreaking technology, you can visit reachality.com or contact us at reversefocus.com/start. And our next story comes from CBS News' Angelica Light, and she writes, "It's no secret that it's not particularly cheap to borrow money right now. After all, the Federal Reserve has increased their benchmark rate 11 times over the last 18 months. And while the Fed did opt not to hike rates in their latest meeting, the benchmark rate is still at a 22-year high. Now, this November 6th column notes that there is one potentially affordable way to borrow right now, and that's by tapping into your home equity. But borrowing against one's home equity can be a smart option when you need access to those funds, as those rates are typically lower than you can get with other types of loans. And the average homeowner today currently has about $200,000 in tappable home equity. But there are home equity options if you need access to your funds, and so what is the fastest way to do so? And she lists several of them, but says before you decide on a home equity borrowing routine, here's what you should know. The first way to tap quickly into home equity is a home equity line of credit, or what we often call a HELOC, a very flexible and speedy way for one to access their equity. And this is an equity loan that functions much like a credit line. It allows you to borrow against the equity whenever one needs the funds. And the application and approval process for a HELOC can generally be completed in just a few weeks. And once approved, you can access those funds almost immediately. But keep in mind, HELOCs can be frozen. Now, HELOCs typically offer a lower interest rate than other forms of credit. And as of November 6th, the average HELOC rate is about 9%, which is much lower than you'd find in many other types of loans right now, especially personal loans. The second option for tapping into home equity are cash-out refinances, and that involves one replacing their existing mortgage with a new one with a higher principal balance on that loan. And the difference between the new and old mortgage is then paid out in cash. Now that method can provide one with a lump sum of funds, and it could be completed relatively quickly depending on the lender's efficiency. But today, few are going to find that option really attractive, as one would actually be replacing their existing mortgage with a lower rate for a higher interest rate and monthly payment. The third option is home equity loan. Now, a home equity loan, also known as a second mortgage, allows one to borrow a lump sum and using the home equity as collateral. And the approval process is usually faster than many other home-related type loans, says CBS, and you can receive the funds promptly. Now, interest rates on home equity loans are also typically fixed rates, and the average rate today hovers around 8.94%. Fourth, reverse mortgages. Yes, reverse mortgages, they say, are a financial product available to homeowners age 62 and older. Now, that allows one to convert their home into proceeds that are typically cash-free without having to make monthly mortgage payments. But what CBS fails to mention is there are now proprietary reverse mortgages which allow homeowners as young as 55 to apply. The fifth option is a bridge loan, and that's a short-term loan that can help one to access home equity quickly when they're in the process of selling their current home and then buying a new one. And lastly, number 6, home equity sharing agreements. Now, equity sharing agreements involve partnering with an investor who then provides the borrower with cash in exchange for a share of the home's future appreciation or equity. That method allows one to access their home equity without incurring debt, but you may be giving away, well, quite a bit of money in the future, depending if that home does appreciate. And our last story for the week comes from Reverse Mortgage Daily. Now, the dust may have settled from the sudden bankruptcy of reverse mortgage funding, or RMF, last year, but the government, they still have questions. On November 2nd, the Office of the Inspector General of the U.S. Department of Housing and Urban Development announced that they are initiating an inquiry on just how Ginnie Mae monitored reverse mortgage funding. Now, Reverse Mortgage Daily reports that the OIG, or the Office of the Inspector General, is now looking into Ginnie Mae's extinguishment of the failed lender from the company's home equity conversion mortgage-backed securities, or HMBSs. Providing oversight of Ginnie Mae's $2.4 trillion in mortgage-backed securities portfolio is a priority for my office, and we have identified managing counterparty risk as a top management challenge for HUD, said the HUD Inspector General Ray Oliver Davis. In December 2022, Ginnie Mae seized RMF's HMBS portfolio due to the bankruptcy, and the resulting stresses contributed to the decision, Davis explained. Now, Davis said her office initiated the inquiry because extinguishing issuers and seizing their portfolios places significant stress on Ginnie Mae's operations. And she also explained that the investigation will take stock of the full circumstances which led to the seizing of the portfolio, as well as the historical business practices of Ginnie Mae's oversight during RMF's time as part of the HMBS issuer program. We will examine Ginnie Mae's oversight of RMF through its history as a Ginnie Mae issuer, as well as the actions Ginnie Mae took to assess and mitigate the risk presented by RMF as a counterparty, Davis said. Our inquiry will include interviews, data gathering, and analysis of compliance with laws, regulations, policies, and procedures related to Ginnie Mae's oversight of RMF. Now, the size and complexity of the RMF HMBS portfolio has been an issue for Ginnie Mae ever since the seizure. RMF was the largest HMBS issuer of Ginnie Mae's program by 2016, and its portfolio size today comprises roughly 1/3 of the HMBS portfolio, according to data from New View Advisors, says RMD. Ginnie Mae's acquisition of RMF's HECM mortgage-backed security portfolio came at a cost. In fact, in March of this year, Ginnie Mae requested $61 million for fiscal year 2024 in a budget request submitted to Congress, or $20.6 million more than 2023. We continue to spot new issues as we take the RMF portfolio in-house, said Ginnie Mae. And they also added, it has become clear that the HECM program requires enhanced governance across how Ginnie Mae makes decisions and across how we assess reverse mortgage issuers and the risk that they bring. Reverse Mortgage Daily notes that RMF ceased their origination activity last November, just seems like yesterday, and then that was closely followed by the bankruptcy declaration in December. Now, there has been no comment to date from Ginnie Mae on the article that RMD wrote, but we will be watching these developments and perhaps some of the reforms enacted in the wake of the bankruptcy of RMF and also the acquisition by Ginnie Mae of their HECM mortgage-backed securities. So we'll keep you updated on that. you.